Live from El Paso, Texas. From the Piper Academy studio, this is the Morning Market Report with Army Piper, OC Guy, and Tradefly.
Is it a banger?
Hell yeah.
Classes in session, this is the show where knowledge is profit, just so you know. Army Piper, OC Guy, and Tradefly, bringing crypto news to the whole alumni. It's the word on the market, the one-stop shop for the info you need every time that it drops. The go-to show that you need right now. This is Piper Academy, it's all going down, let's go.
Good morning, everyone, and welcome to the Morning Market Report. Guys, if you're joining me, I've got some bad news. We're going to talk about it. I've seen some stuff in the charts. I've done a lot of research, done a whole lot of analytical data pulls, and I've aggregated it all. We're going to take a look at what it all means. But bottom line, could Bitcoin be heading to $35,000? We're going to be looking at why that is a possibility and a whole lot more today with Tradefly in the house with me on the side panel here. Guys, let's get it. Classes in session. Good morning, everybody, and welcome to the Morning Market Report. I'm Army Piper, and this is the Piper Academy. We got to break this data down today, guys, because I was going back, was wondering, because I told you guys yesterday I took some profit. I said I need to know what's going on with these markets. I'm looking at this little pump up candle that we got, so on and so forth, and I'm like, well, let me go check the daily. Let me go check the weekly. And I stumbled across something on the monthly, and it's not pretty. And then I was like, okay, well, let's go look at other data that could cause this, because well, let me bring up my co-host first, because we gotta talk. What's up, Tradefly? How you doing, man? Did you bring your emotional safety blanket today, man?
You know, I thought about not coming because I don't want to hear this bad news. I've already had enough bad news in my crypto life, but that's okay. Last night was dope. We had a little draft party on the show last night, so that was cool, and actually had a pretty good turnout and some participation, which was fun. But yeah, man, you know, it feels like we're getting into that recession word, and I think that if the data is finally catching up with what reality is, and we've been saying it for a really long time. Like it's ugly out there. People are hurting. The cost of things is just astronomical, right? It's twice as expensive as it was at some points, you know, just a few years ago. And housing is so expensive, and like it's going to crumble at some point. It's a matter of time, right? And when you start getting a weak labor force on top of it, how are these people affording everything that's so much more expensive? So, you know, I kind of talked about this last night too, like your expendable money, what you have extra to play with, to put into things like crypto and your investments, it's not there. So what's naturally going to happen?
Plus, you also see a weakening of the labor market. You know, right. And there was a report recently that I read that was talking about 1 in 4 or 2 in 4 don't feel secure in their job right now. I think it was 2 in 4. It might have even been higher. It's been a while. It's been about 3 weeks since I've seen it, but you know, when you have that type of insecurity on, will I have a job next month, 2 months from now, next quarter, you tend to sit on your money, not roll it over. And we even talked about last week on the show, where is retail at, right? And that there's not enough retail to really pump this market as a whole, because there's so many new projects coming out. It just keeps flushing back and forth between these new projects, right? So, and meme coins on top of that. So we're seeing already that there's not enough retail buyers because they don't have enough retail money that they want to put into something that's high risk. So yeah, absolutely. You're spot on with that, bro. So,
but on a bright note, we have people in the chat. You want to say what's up to them?
I was going to say, can we talk about the great people that are in our lives right now, keeping up my spirits? Go ahead, run with the Tradefly, give it to them.
Hell yeah. You know I love doing this. Trade Intuition, he's in here. He said, first, what's going on, my guy? Mike, play with a good morning. Ninja, Glock, Glock. Happy Thursday to everyone. Dude, I didn't even realize what today was. I thought it was Wednesday. True story. I was texting Piper. I was like, yeah, I'll be there Thursday and Friday. And I was like, today is Thursday. All right. BC Port Corp, what's up, dude? I was watching your guys' show earlier today. Alexander G, best mod in the house. She was even in there this morning. I don't know. When do you sleep, lady? I mean, geez, oh flip. Anyway, I hope you're staying cool. It's warm out here. French Toaster, hola, my friend. Kyle Fields, yo, how you doing? Crux of Crypto, my G, what's up, dude? He was in there last night. French Toaster, he's in the league. I'm gonna dominate you, dude. I'm sorry, man. It just is what it is. You're playing with a fantasy football god. But all right, dude. There we go. I gotta play my audio. All right, Crypto Pollo, Cluck Cluck, what's up, my dude? Crypto AI, Dustin Singer, the Biomax, how you doing, my guy? Lunar Beaches Crypto, let's see the waves in here. Eric, Ballin, Wallin, Amy, Lives Crypto with the orange hearts, Dusty Hunt, Buck. Who else do we got? Hart, what's up? I know he was in there. Let's see, I already shouted you out. James, how you doing? And username, he ain't giving me no crap this morning, is he? Nope. All right. My man. We're starting off good today.
I love it. I love it. Let's go.
Is in there. And geez, man, look at the chat is flowing. There's a lot of y'all in here today.
They want to know where this $35,000 Bitcoin call is coming from. They're like, Piper, what's going on?
I'm gonna about that. I'm gonna keep going. Louis B, Dustin Singer, and Caffeinated Cryptos in here. Who else? I know I just saw somebody else. Retro Mike Tech, how you doing? L. Jones, I ain't seen you in a minute. I hope you're doing well, my friend. Baby Yaz, baby Yaz, baby.
Baba,
and then
Baba.
I think that is it. If I missed you, I'm sorry. That's a lot of people to read. I gotta be.
We love you all. We love you all.
Yeah, that's my alumni. You know what I mean?
Let's get into the news. Let's talk about news, and then we'll be right back. And we're gonna. Well, this is news. This is just the news, man. I can't. It's just news. I'm just giving data so that people know knowledge is profit. Knowledge is protecting profit, I should say right now. So, guys, let's go ahead and jump in here. Fear and Greed Index, it's sitting at 29. We're not really getting a big drop on the Fear and Greed Index. It's staying right there in that range. Sitting at 29 right now, still in fear, not hitting that extreme fear yet. Market cap holding above 2 trillion, so that's not disastrous yet. Crux, this is Crux's thing that he watches all the time right there. If it's holding above 2 trillion, he's got faith, right? That volume though, look at that volume dropping almost 10% in the past 24 hours, and dominance for Bitcoin starting to fall right now. I think that people are seeing these really quick movements, these really quick pumps that are happening in alts. Like yesterday, I was seeing 8% up on this and 7% up on that, and much higher than what Bitcoin's recovery was yesterday. Which, by the way, it's erased all of that today. And so I think a lot of people are moving into those alts to get those rapid pumps to the upside, as opposed to the slow but sure moving Bitcoin. So looking here on the daily right now, there is a lot of green on here. Let's scroll down here and take a look and see what we're seeing. Bitcoin sitting at just under $57,000. Ethereum under 2,400, holding above some key levels there. It's at critical support. TradeFly is going to be showing you that on his chart. He is watching that one closely, guys. Solana is at 134. You can see it's up 4%. That's what I was talking about. These altcoins minus Ethereum, these altcoins got a much better pump on the daily than what Bitcoin did. Doge up 2.4. You can see Cardano's up 6.6%, retaking that 10th place position. Toncoin losing that position, only up 0.3% there. Avalanche is up 1.5, Shiba Inu 1.9. And lastly, we'll come over here and round it out with Near Protocol up 2.1%. Caspa retaking its 22nd position here, moving back up to 0.9% to the upside. Let's jump into the liquidation, see how this is looking. Guys, past 24 hours, 36,363 traders were liquidated. Total liquidations coming in at $95.25 million. Largest single liquidation was HTX. It was Bitcoin on... it was on HTX. That's Huobi, I believe. That was Bitcoin. It was $1.76 million. Sorry about that there. Let's move over here and check out this economic data that came out this morning, guys. We had ADP and initial jobless claims that came out this morning. We are waiting for ISM services. I have a feeling these are going to be way lower than what they're calling here, 51.1 and 51.2, because services, I do think, have dropped. That is your travel, your luxury, your all that good stuff. People aren't going to be paying for that type of stuff right now with the things that I'm seeing on the economic data. And so I do believe that they're going to miss this, and this is going to come in lower. It's going to be at the top of the hour. We will make sure we come back and look at that. But looking at this ADP employment change, guys, it was at 111. This is private sector, by the way. ADP is private sector jobs. It was at 111,000 previously. Now they had a consensus of 145,000, way up there. Forecasted to be 115,000, still a little bit higher than what it was. Came in at 99,000, way under what they said. Initial jobless claims, which these get revised all the time, came in at 227,000, under the consensus, meeting neutral on the forecast. But these you want to be lower, right? This means that less people than expected filed for unemployment, but these get revised all the time. If I go over here and we put this on the one, there's some other data in here. Continuing job claims, it's actually dropped a little bit right there. That's 1.8 million, 1.83 million versus 1.87 million. And then there was the other one in here, non-farm productivity and unit labor cost. Unit labor cost did not actually come in as into line like I thought it would, and then that productivity actually beating expectations quarter over quarter there. But yeah, I am going to be watching closely for this ISM services. That's going to be a big one to watch when it comes in at the top of the hour. Let's jump over here and talk about some things on X marks the spot, guys. Right there. No, I guess we don't have anything to talk about there yet. We'll come back and talk about this oil one. Let's jump over here, and I want to go to the news setup. So let's go over here, and I want to bring this over. I don't even have my boy in here. Let me bring you in here with me, Trade Fly, and then we will talk about this here. There we go. There's the Trade Fly.
You're my boy.
You're my boy. Well, you're purple right now. I'm sorry. You're an OC seat there. I'm going to put you in his seat.
I'll take it.
All right. I want to talk about some things that I'm seeing on the economic side on this. And I apologize if I just burnt everyone's retinas. Guys, this is the 10-year Treasury. And I'm watching the Treasury bonds. They're dumping, which means that people are buying them up. They are running to safe money right now. So I do want to show what's going on here with this 2-year, 10-year inversion, because when they get inverted, that's typically like, hey, economy, things are going to be doing weird stuff. Inflation's way up, so on and so forth. But when they start to come back in line, you see this touch right here. We're back at this line right here. We came back into line here. We came back into line, right? Do you see these gray blocks behind here, Tradefly? You see those? Guess what those are? Guess what those are? Those are recessions. And typically when we cut after the inversion is complete, we go in and we hit recessions afterwards. I just want to show you where we are. Let me bring this over into scope here. Let's come over here. We've been under this for quite a while now, going all the way back to July 5th of 2022. And right now we are trying to break above that. That is typically when we see recessions occur, is after this, which means this is an indicator for big smart money. This is from Fred. A lot of the smart money economists, they go to this website to look at this data. This is coming from the Federal Reserve Bank of St. Louis, where they get this info from. And so this is an indicator to big money that a recession's coming, right? That's another reason why we see so much money going into those bonds, because with rate cuts coming up means that they're going to be offering less on the bond yields. And then on top of that, it's safer money when you go into a recession. So I just wanted to show that first. Come over here. This is from eHack. If you guys don't know, you can go on and see all of the notes from Meet Kevin, and he's got some great data in there every day. It's ehack.com. But one of the things that he talked about here on the show yesterday was that changing federal funds rates before and after that Treasury yield uninverts. So this zero line here is when the uninversion happens between the 10-year and 2-year Treasury bonds. And you can see that the price going into it for the funds rate, they don't typically cut until after that inversion happens, which is another indicator that those rate cuts are going to be coming. with all of this, you know, like, hey, the inversion's happening. That means another thing that happens is rate cuts, right? And we also know that another thing that happens is recession. So now we long OC. That's right. So there's that one. And then I also want to show here changes in the S&P 500. So what happens after this inversion with the S&P? We already know that one of the things that happens is we get rate cuts, right? Well, the other thing that happens is, with the exception of 1998, that's an outlier here, you can see 2007, we had downside. There was a little suckers rally, grabbing some liquidity, went down much more. 2000, December, just down. There was another suckers rally, went down. And then you can see here that we're coming in on the pink line. That would be September 2024. This indicates that the S&P, when this inversion happens, along with that recession, typically leads to downside also. And then I just want to bring this up here. This is a majority of the decline in these bear markets occurred after the Fed pivot, going all the way back to 1969, 36% drop, 1973, 48% drop. So all of this is coming into line too. Now, I know what you're saying. Is he just going to show me economic data of why we're going down to 35K? No, this is fundamental. This is the fundamental side of it. What is the economy and all of this economic data telling us? Well, historically, it means ABC, right? But we're going to be looking at technical analysis. And then I'm not going to leave you with nothing but doom and gloom today, because you do not approach a thesis with the intent to prove your thesis correct. That's not how you do it. It's not the scientific method. Anybody who ever does that in an argument or in work, they're doing it wrong. They need to go back and get educated in the process. Your job is to prove yourself wrong. So I have literally looked everywhere to prove my thesis wrong. I was able to find a few pieces of data, and I will bring you that also. That will be your little sprinkling today of hopium, because I did find some stuff to prove my thesis wrong. So there you go. There's your hope. We'll get to that. But TradeFly, thoughts on this economic?
Piper has taken put that bear logo right on your head, dude.
I don't. Do I have the bear? Huh? Where's my bear?
Remember that?
Where's my bear? Where's my bear? I got to find the bear.
That's you. That's you now.
I may not have the bear right now. I don't even know where the bear is. I don't even know where the bear is, man.
Right, you can
so what are your thoughts on this economic data?
Well, hey, first off, there's somebody very important in the chat that we have to give a little love to. Mr. Trade Intuition, Joe, gifting 5 Piper Academy memberships.
Oh, let's go, bro.
Fields actually got one. So that's pretty cool. L. Jones got one. Look at you, man. You show up. You've been gone for a while. Boom. Piper Academy membership. Just nailing it. KB got one. R. Anthony, Vince, Tesla Pilot. All frequent customers there. So congratulations, guys. Come on over to the Discord. All right. Economic data. It's all bogus. It's all lies. So why are you asking me questions about it? It'll change next month.
I would say job numbers, yes. The history of economic data, that's not garbage. You can't.
Nah, I got you. I mean, I think what you just pulled out, the chart is pretty interesting. However, how many of those times was the definition different for what a recession is? I will ask that question.
True. Very true.
Remember, that has changed very much so.
That is a very true statement.
I guess we can only be in a recession when the government says we're in a recession, and I don't think they're going to do that. So,
you might have a point there. Look, there's your hopium right there. See,
there was, I think, that an article was talking about GDP versus GDI, which is gross domestic income, and there was a very interesting split there that we saw a divergence essentially, and that we're not in a very good place when it comes to GDI in comparison to GDP.
No, not at all.
something to take note of there. Again, the government tells you what they want to tell you, and I don't think they're going to give you doom and gloom going into the election, but I wouldn't be surprised if they drop a shit sandwich for the next guy either. So
absolutely. All right, I want to jump in on this. I'm going to start off with some. We're not going to do top down, because if I went top down, I'd be going into the monthly. That's what I just looked at last night. I want to go in and talk about where we are currently with Bitcoin. I want to look at what happened since yesterday, where we actually got a rejection at, and then I want you to pull up your heat map. Let's go look at some long-term data though on the wrap out of all of this. So, excuse me. Let's go ahead and bring up Bitcoin here, and let's look at this chart, and then we'll come back with the heat map. So have that ready there, TradeFly. Looking here at the heat map. I knew it. I knew it. Look at here, guys. Yesterday, we got this little bounce here off of the 300-day exponential moving average. Now, I want to show that the last time that we went down through this, it was a very big wick, very, very much like what we saw here, except this was a much bigger drop candle, so a much bigger wick, right? We did see that 300 give us support. It was also the 618 here on the golden pocket, 56,000, which I actually discussed when we were up here and getting rejected, that this is where we were likely heading to. So if you got into that short, congrats on you. But yesterday, that candle just flipped around on us again, and now we're coming back down, coming into line with that 618 again. So we are at critical support right now on the daily time frame, sitting on the 618 and that 300-day exponential moving average. We're on the daily still. Yeah, that's on the daily still. If I actually put this on the weekly, I want to see where I am on the weekly here. There we go. Yeah, the 50 is going to be coming in right below it here. We're right below where that 300 is coming through. The 300 weekly, the 300 daily is sitting right around where the 50 week averages. There we go. I had to get that out. Good Lord. That made my head hurt. I haven't had enough coffee for that yet. So I am going to be watching that. Let's look here on the daily and what I'm seeing here. On the daily, guys, this is what led me to end up on the monthly chart. And here's why. I looked here and I said, okay, look, bearish trend. We're getting a burnout on the battery here. This probably means that, you know, the trend is running out. We're losing steam here. True 7 has pegged on the 70. Like, this is set to move up here. But then I was like, okay, wait, volume is really dropping and getting dark right here. Money flow is still in the red. Let me go check. I was on the 4 hour seeing all this too. I was like, let me go check these higher time frames. I went to the weekly. I want to talk about that for a second. I went to the weekly here. It was like, okay, well, on the weekly, it's not horrible. Like, we're getting a bounce here. Key support 300. Got that beautiful 618 there. That's not bad. Look down here where money flow is still in the green a little bit. It's coming down a little. You can see that wave is slowly bleeding out money flow. But, you know, we're getting pretty low here on the oscillator ribbon on the True 7. We're sitting about the mid-range here, so this could go up, could go down. Don't really know here what could happen with the RSI at this point, but this isn't bad. And then I ended up on the monthly, and I'm going to show you that in a moment. But first, I'm going to kick it to TradeFly. He can talk about what he's seeing here. But, yeah, as you go out, and right now in the short term, it does look like we could get little spikes of pumps. But as I said on August 1st, guys, it's September 5th. As I said on August 1st, any rally that I saw in August, September, I was going to consider a sucker's rally. We said that. I still stand by that. So let's go ahead and kick it over to your chart, TradeFly, and let's see what you're seeing. I know you got that beautiful heat map up, so let's go.
Damn right. And I do it with the red here. So thanks to my man, Mr. J. Everyone else has the green. So a little bit different here on Piper Academy. All right, here is the liquidation heat map on the 3-day. You can see liquidity is really starting to build up at around 58,700. So liquidity is actually to the top side of price action, interesting enough. But I think there's a lot of people that have the same sentiment as you right now. All right, I think there's a lot of people that are kind of bearish. You do see the trend of price action going down. This is building, okay? So this isn't just this liquidity came in once we had this rejection right here. This liquidity is coming in as price is going down. So people are, I don't know, I'm not going to say being smart about it, but they're putting their positions, because remember, this does include stop losses as well. All right, so they're putting these positions over top of where this rejection was at about 58.5. Nice round number too. Never usually a good thing when we're talking price action. Now, how does this translate to the chart? Let's come over here. All right, 58.5. Let's see where that's sitting. Man, that is so achievable. Like, look, it's just right there. So I would not be surprised if we find some support here and it reaches up and just clears out the liquidity real quick. That would not be surprising to me at all. The issue that we're having right now is kind of, look at this. And this is on the daily, which is a little bit more scary. Looks like a head and shoulders is starting to form. If not, you could probably already say that is formed. All right, here's what I don't like. Now, I've talked about this before with head and shoulders, and there's two things that I really look for, minus the formation. But when you have this shoulder higher than this shoulder, it's more likely to play out. And I'll say from my observation. Okay. So a lot of times you'll see this shoulder's here, you'll see a head, and then you'll see the shoulder kind of bounce up a little bit higher than the left one. And people are like, head and shoulders, head and shoulders. I'm like, yeah, pump your brakes. I think, statistically, you're more likely to actually see that one not play out. This one is the opposite. This one is actually more bearish in mind, right? Because you had a stronger, we had that little bounce, Piper's talking about maybe a fake out here, got a little bounce over here, and then came down. And look at the weakness, right? You never want to see the highs just consistently going down. Like, I mean, it's just almost perfect. But that being said, if you take it on the 4 hour and you build a channel out of it, then it's actually a bullish pattern, because you got the series of lower lows, series of lower highs. That actually creates a descending channel, which is actually a bullish pattern coming into an area of support. So there's a lot of conflicting information right now in the charts. Typically, if I were to see this where it's a horizontal level of support and you had a descending triangle coming down into this area, that would scare me a lot more, to be honest with you. But I just don't like trending price action into a support level. That for me does not make me feel very comfortable, to be perfectly honest with you. So be careful here. We did get the bounce we were looking for, right? We had a small play at 56K. I said there was going to be price action off of that area. It's a very significant area. I knew there would be some sort of price action there. That's played out. Okay. So we got our bounce up, up to the green. All right. That's your would have been your exit. All right. Entry, exit. Now we're coming down for another retest. We got to be very, very careful. And I don't know what happened to my indicator, so I would love to see, what that looks like coming into it. Here we go. I'll find that real quick for you. Boom. All right. And if you guys don't notice, why? So now I get two of them. That's awesome. All right. That made no sense. So, anyways, looking at that, you are actually getting the oscillator working up and right. All right. It is working up and right as it's coming down for the second retest. So, that's something that I actually look for when I'm saying, hey, like if we're retesting a support area, I want to see this trending up and right. And that usually makes me feel a little more comfortable. It's just, there's a lot of bearish, I don't know, price action leading into this area of support. So I would say it's risky, but at the same time, I mean, this is a significant area. So, I don't know how uncomfortable I would be. I guess probably a little bit. I'd say it's a little more risky, but putting a stop loss underneath it here, if it breaks down, then there is an opportunity to see some movement to the upside in my mind. Everything the metrics wise, like it's all saying bearish, 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 all the way from the hour to the daily. So this would be a high risk play in my mind, but it also could be an opportunity. It's just we keep getting bad data over and over and over again. And then Piper's getting bearish on me. He's making me feel uncomfortable. But when it comes down to it,
apologies.
I'm going to be honest. I believe in this trend line. I believe in that trend line. I have conviction in that trend line because it goes way back. You can see it. High support, breakdown, retest. That's what I'm looking for. If we get a breakdown with a retest, then I'm saying, oh, hold up. All right, my sentiment is now changing. And if you can fact check me here, my sentiment changed when we broke this area pushing up. I said, if we broke this area right here, we were going to take off. And that's what I was looking for. So this trend line is significant. And you can just see it on the charts. If you just zoom out and look, you see how significant it is. This also played into my analysis when I said, hey, how high can we go for 2025 or 2024? Like this trend line is actually where I came up with that analysis. It's very, very simple TA. But I'm hanging my hat on it, to be honest with you. So this is key for me. We're going to watch this area. If it breaks down, then we're coming to 2022 highs. That's almost guaranteed. You do have a little pit stop here. You'll probably see some price action on the way down. You have this descending broadening wedge, which remember is a bullish pattern also. All right. So I don't know, man. I wish I could say like I have a lot of conviction to be like, hey, go long right here. I don't feel comfortable with the way the price is coming in, but at the same time, I believe in this trend line, and I wish I could give you something better, but for now until we break the trend is your friend till the end. And that's kind of what I'm sticking with. So just keep an eye on this trend line. That's really what I have for you. Right around 56.4, 56.5. That's a really super key area to maintain. If we break it, if we lose it and we retest, if you see something that looks like this, be scared. Okay? Be scared. That's
that
what I'll
level?
say.
What's that level down below on that other trend line?
This right here. Like immediately below,
Yeah.
we're sitting right here with this area. So you're looking at about 50,500, 50,600. So you're
Okay.
going to see some price action there. That's guaranteed.
So that would be in line with the 48.49 that I was talking about originally, which is also the 786 of my trend. So
well, the
of my
48.
large
So
trend.
now if you're talking about 48,000, now you're talking about 2022 high and you're talking about the top of this range right here, which is, you know, basically flipping an area of resistance and now getting confirmation that what was resistance is now support. We haven't come down for that true retest yet. So that really hasn't happened on the 2022 high. We did get this wick, but we had willing buyers there. And that's another thing you got to look at too. Like when you have this area getting retested constantly on the way up, like you look for these wicks, right? Buyers, 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 buyers. That's what it's telling me. There's buyers that are following this trend line. I don't know who it is. I don't know if it's whales or institutions, but they are buying this trend line. This one was different. All right. Look at this crazy drop we had, this cascading effect. And what did we talk about? How did we get here? That was liquidity. And we told you guys about that. There was a reason this came down. They wanted that liquidity. They had to get it. Now that that liquidity is gone, there's no real reason for them to drive the price action down anymore in my mind. It's basically the economic factors and what's going on externally to crypto of why crypto is actually pulling back, because it's just not good out there right now. And that's what's holding us up. And I don't think it really has to do with crypto in general. Like there's not this game of like playing catch the liquidity. That's gone. That factor's gone. That's why I think that my bias is now actually to the upside, because more of the liquidity is to the top side with people shorting when we got to the all-time high. So that's why my sentiment has kind of flipped, where I was more bearish when we were at the top, right? And I said exit strategy, all-time high. My exit strategy, 69K. That's my main exit strategy. Now I'm just kind of DCAing in, right? And then, you know, once we came down and cleared out the liquidity, we kept the bullish structure. Now I'm like, okay, now we're ready. We're ready to have that continuation of the bull market that everyone's been talking about, but now everyone's just magically flipped into bearish. Like, but now we're ready for that. We have a bull flag on the chart. Like that's there. We have two bullish patterns within one pattern. Like it's tough to me, man. It's really conflicting.
It is. And Alex O
Yeah.
said that there's a pump coming tomorrow for Bitcoin. And yes, guys, I'm not saying this is a straight down line. We're not going to look at these candles and see just nothing but red candle all the way down. There will be bounces. I just don't think, based on the data that I'm getting ready to show you, stand by. I want to go over first and talk about the economic data we just had come in, because I told you I would come over and we'd take a look at that. So let me jump over here. Let's look at this for a second. Looking here at the economic data, let me put this on 2-star impact so we can get that ISM services. Actually came in a little bit higher. So I thought this would come in lower, coming in a little bit higher here on ISM. Non-manufacturing PMI, this is non-manufacturing, just so you know. In the United States increased by 51.5% in August from 51.4% in July. Non-manufacturing PMI in the United States averaged about 54.82. So we're way below the average of the norm, but still better than the previous month. And what this is, guys, it's data based on purchasing and supply executives nationwide. They look at things like backlog orders, new export orders, inventory changes, so on and so forth. And then this is, for services, right? Supplier deliveries, inventory sentiment, stuff like that. So this not as bad as what I thought it would be. So there's a little dose there. But let's jump over to the chart so we can take a look at that, because this is the monthly data that I went to look at. And I want to show you guys a couple of key things here. And then I want to bring it up on my side by side setup and show you what I'm seeing there also. So you can see here a couple of things. I'm going to go back in history here. We're now looking at 2017. Okay. And you can see when we got way up here above this 70% line on the RSI, and we also printed this VWAP oversold. That's what this overbought. I mean, that little indicator right there is a VWAP overbought, started to come down. Money flow started to pull back, right? That move from wick to wick, guys, was an 81% move. Now, this was the end of the bull run to the bottom of the bear market. So keep that in mind. The reason that I was saying 35 has to do with the lowest denominator. Here is an initial run. This would be very similar to what we have right now, post-halving, right? This is a post-halving scenario. We get a pump up. Things start to run into a little pullback there. We hit. Now, up here, we didn't get any of the stuff, but down here, we do have that RSI that is coming in up, hitting high on the monthly, right? And so we go and we measure this one. This is the scenario that I think we're at, but I don't think it's this bad. I think it's less than this, okay? But that one was 72%, guys. That was a 72% pullback from the top there to the bottom before the big run-up, okay? Now, let's come back over here. We get another peak up here. It goes way above that 70%, okay? We get a really high RSI. We get a downtrend. We get the overbought VWAP. It is right there. That little orange dot is the overbought VWAP. And we're starting to come back down. Things are turning pink here. Money flow starting to curve. Volume starting to curve, right? Everything's moving down. This move here happened mid-cycle, and this was a move of 56%, 55.9%, okay? We move over here now again, and you can see we peaked back above here on the RSI, above that 70% again. We did get a little transition here, and then it turned back to pink again, and you can see True 7 started to come down, money started to come down again, and there was a little wavering here on the volume matrix. That move obviously was the end of the bull run, or sorry, excuse me, my bad. That was actually where we came from here, and we pulled down 28%, 30% before the bounce back up. Okay, but that was on the bear market. That was at the end of the cycle. That was part of this whole downward process. If we go over to where we are now, and this is what gave me this pause for effect last night, okay? I saw the downtrend here. It happened. This happened on April 1st. Okay, that is when that printed. For the month of April, I should say. We have that indicator right there again of that VWAP overbought. Okay, you can see money flows coming down. It actually just turned red here a couple of months ago, where money flow is negative. We got above that RSI again. True 7's coming down. Volume's coming down. Guys, if we go in here and we just measure off from the top peak here, about 50%, which is a pretty much in line with the best scenario we've had in a bull run, was at 56%. Guys, that's about $35,000. And really, if you consider that right here, we've got this area on our charts. This is the dynamic reactor coming in right here. This is the 200-day exponential moving average right here. If we take a look at where that range is at, let me go throw a T-box on there. And let's take a look and see how that's looking. That would be right there in line with about 37, 39,000. So even if this was our catch point, that 200-day, 200-week exponential moving average, I should say, that is going to be in that $35,000 range. That 50% pullback definitely puts us right there in that. Again, let me pull that for you and show you. That would be to the bottom of that would be right at 50%, 10.6% technically. And that's what I'm watching closely for there. Let me go over and grab some other stuff to throw on the chart. I just have my screen flicker. I got a new cable, by the way, guys. I want to get it all set up today. It's been shipping for a while, but I got a really high quality cable for this thing now. So hopefully that gets rid of my screen flicker. That moves all my junk. Let's go here and let's take a look at what I'm seeing here on the side-by-side though, so that you guys can see that. Let's go here. Bam, there we go. And I want to go back historically, pay attention to this right chart, because you can see this gives a really good heat map for us that lets us know, like, hey, when things are really bad, they're pulling back, right? And this is in line. Let me go over here, do that. There we go, and go back to here. So there we go. This area here is this area here. Do you guys see that? So what I'm watching here is how how hot we got, I will say, how heated up we were in this stage here. That was this point here for that pullback. That would be this pullback. If we go over a little bit further and take a look at this area over here, we got really heated up again, started getting into some dark red. That led to that pullback. That one again was like 50%, I believe. I think I said, let me go double check that. Yeah, that was about 55%, 56%, and that's the scenario that is not too far off from what we're seeing right now. And then right now, guys, we didn't get as deep red, but we definitely hit red here. And typically we do have these moments like here where it came in and then went a little bit higher back in 2017. Matter of fact, if we turn that on and look at it, there you go. There was a period there where we got really heated up and there had a little pullback. I want to get that in there so I can show you how much that was. That pullback itself there, where we did get that little heat and then it cooled off, that was a 40% move. So even a 40% move from right now, let me go bring up and isolate this first chart and just go for that 40% move. That's a best case scenario to look at what we're seeing right now. A 40% move on that would still be in line with $43,000 Bitcoin. And shout out to LBC. He's been talking about that one for a hot second. But that's what I wanted to show. Like, the data is here over and over and over and over repeating. When these things fire off on a monthly chart, we have substantial pullbacks. And technically, we have been printing on this stuff since April, right after the all-time high was reset back in March. So TradeFly, thoughts, man? What, like, am I crazy here, or is this data lining up historically? And even best case scenario, if this is to play out as it normally does, we're still looking at $43,000 Bitcoin. What are your thoughts on that?
Yeah, no, man. I mean, I don't like it. I
No,
definitely
neither
see
do I. I hate it.
I see the argument, you know, for sure. But the chart just looks different. It just looks different to me. Because when you looked at the previous two all-time highs, like, there was a much sharper drop off pretty quick. And if you go to high to low there, I mean, you're talking about, let's see, April of 21, and then you got a retest in May, and then you're talking lows by July. And then the
Yep,
second
but
high, November, retest
I want
November.
to point out something though to keep in mind, for everyone to keep in mind while you're showing this data. We were getting stimulus checks at
Yeah,
that
no
point.
doubt. No
Now
doubt.
we're
But we
looking
also didn't
at,
have an
am I
ETF.
going to have my job in 3 months? Big difference here. So,
Yeah,
but yeah,
yeah,
keep that in mind. The chart does
for
look
sure.
different. I don't want you to stop looking at the chart, but I do want people to keep in mind there was a different economic and liquidity situation going on then versus now. So let's jump back to your chart.
You're not wrong. You're not wrong. I mean, it just, look at this, how long we've been consolidating in this area. And yeah, it's been a weak kind of fall down. We had the hype of the ETF going into that move. Like, that was really the catalyst for this. But like, if you start talking the 4-year cycle, which is something you guys have talked about quite a bit, like, we're still due. Like, we made a move before we should have made a move. So like, are we going to continue the cycle? And then are we still due for our actual, like, bull run? Even though technically this was a bull run, let's be honest. But I mean, this is, yeah, it's tough. I like you said, it's not crypto that's dragging crypto down right now, because it's more bullish than ever. Like, they're taking a stance on crypto, and it's a positive stance. And even both sides are now being open and permissive to the fact that cryptocurrency is here to stay. We have never had that before. We have never had that before, where, like, everyone is agreeing that like, hey, crypto's here to stay. Cool. Now we're going to start getting like real regulations, and like they're even incorporating like people from Coinbase to help them. Paul, was it Grew, or I can't remember his last name. But like they're helping. He's helping with developing some of these policies. Like it's so different. So might we pull back? Maybe, because the economy is just poo. But I'm still more bullish than ever on crypto as a whole. And I think if you're playing the long game, I wouldn't be scared out of it, because I think ultimately, if you're thinking about long term, where is crypto gonna go? It's going to go up. Now, be careful with these altcoins. And I've always been skeptical of altcoins, to be honest. Like, I'm trying to get a little bit of exposure, but my exposure in terms of percentage to my portfolio is so freaking small. Like, I'm very hesitant when it comes to that. Bitcoin, Ethereum. I mean, Bitcoin, is here to stay. That's just fact. Okay. That one is going to stay. At some point, somebody's going to rival Bitcoin in terms of utility and real use case. And that will probably take off, and you're going to see some exponential growth. But who that's actually going to be at this point, I'm not sure. I thought it was Ethereum. Now I'm kind of wondering if somebody else might come in here like Solana or someone along those lines and give them a run for their money. But Bitcoin's here to stay. And because of the finite aspect of the supply, I've never been more bullish on Bitcoin, even though our economy is crap, and that's the only thing that I think is really going to hold it down.
Yep, absolutely. And I do believe in Bitcoin long term. I just I want people to be aware that they could be looking at a 40 to 50% pullback, especially when you look at the fact that we have the inversion of the Treasury yield bonds, which typically is an indicator right before when it uninverts. That is an indicator right before a recession. We've got weakening job performance. We've got all of the things, the rate cuts, what normally happens in the stock market. Remember, guys, that chart that I showed you on the stock market, this one here. Oh, whoa, that is not the right button, but okay, there we go. This one here, these 50%, 35%, 27%, this is the S&P. If the S&P pulls back this much, crypto's definitely going to pull back more. It's way more of a risky asset for investors than the S&P is. So when we're talking about those numbers, yeah, even if we had a 35%, it's easily a 50% pullback on Bitcoin. So I did want to point that out. But Hopium, you talked about your chart. I want to give you where I was able to prove my thesis wrong. And one is the indicator that has always called it correctly. Guys, that is the Pi cycle top and bottom indicator, okay? And you can see every time that we've had the cross right there, there's that Pi cycle cross on the signals. That has led to that has been the indication of the top. We go over here a little bit more. There's that one is right near the top, okay? We go over here to 2021. It actually crossed in the first cycle. That's why a lot of people talk about the second bounce that actually went a shade higher was actually an over-exaggerated dead cat bounce. That's been said before. It actually crossed in the May time period before the dump of 2021 back to that all-time high. We have not actually gotten even close to it crossing yet. You can actually see that we got stuck underneath the line. That in itself is troublesome, because when you look here, we typically stay above the orange signal line all the way through the bull run. It's when we're underneath that is a downtrend, and you can see we are now retested underneath that and have rejected below that line. So the fact that it hasn't crossed, bullish, but the fact that we're below it gives another indication even that we are in trouble here. So at the end of the day, I just don't want people to look like this guy. Let's pull this guy up. This dude here, he said, I'm either going to have the greatest comeback of all time, or I'm going to lose it all. Years of hard work and suffering. These last few weeks have been nothing but pain. Hopefully by the end of the year, it'll be max again, max gains. Otherwise, I may have to rope max. Wake me up in December. And guys, he's down over $500,000, 90% down on his total gains. I'm not sure what all he's invested in, but I don't want my community, our community, you guys, the alumni, I don't want you guys to be without this information. I am not saying go run off and sell everything. If you are convicted long term, you hold on to it. You can, put more money in. Dollar cost average. These are opportunities. We talk about golden opportunities all the time, but I do want you guys to be aware. I see a lot of people talking about this is a composite man pullback, and then this guy's going to take all your stuff, and then he's going to rally back up. Guys, you got to be aware. We have a very, very dark economic situation that is building right now. And if you guys aren't looking at all of this stuff, then you've got you're missing data, you're missing information in your thought process and your decision making process. So I want to make sure that you guys have everything. Me personally, I have taken a lot of profit off the table. I'm out of all of my alts. I sold off a lot of my stocks. I'm actually sitting on a lot of cash right now, except for my Bitcoin, so that I can have that cash to get back in, because for transparency's sake, since March to current, I've seen $300,000 in unrealized profits disappear, and I still had a lot of profit left. I was not going to lose the rest of that, and I am prepared to buy lower. If I see these markets turn around, things like my Piper Sniper kit, which will give me a double fire indication to the upside. When I see that stuff happen, I can always get back in, because the parabolic run happens in the second half, the last 20% technically. So right now, I am fully protected. I am packed in safety, wrapped in dry powder, and I'm ready to go with it. But if I am wrong, I can always get back in and still catch the main parabolic move. I don't need to catch the top and bottom. I just need to get the center cut of the steak for the best part of it. So that's what I'm doing.
I mean, that's solid. That's solid advice. And like I said, my strategy has kind of morphed since we got to all-time highs, right? I've now flipped to more of a DCA strategy right now. As price pulls back, and if it goes to the areas you're talking about, then I'll continue to DCA in. And my strategy has not been kind of a weekly or a monthly type thing where I do it on a time-based schedule. Mine is, I have a line in the sand. All right, I have a support level. It's a critical area of support. I'm going to layer in. 50K was one of them. If we go down to the next level there, then I'll layer in again. And that's just kind of how I'm going to attack it. And that's just going to be my personal strategy. So if we get there, cool, because I'm lowering my entry, and I'm okay with that.
Shout out to Bluff City Breaks. He said, I knew this guy was a stablecoin side ladder. Bro, I was invested with over $500,000 in this market. But I know how to protect my money, because I'm not dumb money. So, guys, let's go ahead and let's look at a couple of alts. Do you want to check out Soul Train? I know Alex O called that out. We'll look at that, and then we'll come back and we'll look at Caspa before we walk out of here.
Ugh. I don't ever want to see that again.
I love you.
All right. Did I lose you?
No, you're good. You got Solana up.
Okay. All right. So that's weird. It's not. There we go. Took like 3 clicks to get it to go. All right. Sweet. Let's look at Solana on the daily. So this was a pretty key area. I was talking about 128. I was looking for some support there. And I said, if it wicks below that, about 121, it's going to be an area, definitely a buy area. And really, I was just coming back. Like, look where the wicks are. Wick, 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 right? What I'm telling you, when you see these wicks, it's telling you that there is willing buyers in that area. So sure enough, you're getting some price action. These are scalping intraday type opportunities for Solana. And this one is really starting to play out. Okay, so where would you look if you were doing a scalp or intraday trade? There's a couple things that you can look for, right? A little bit more risky to take it up to the point of control, but you do have the dynamic reactor on the top side. I'm going to be looking for a rejection in that area, or you really just find this level, like you kind of go back left on the chart. You say, okay, here's some support. There's some resistance. You draw kind of a happy median. You see a little wick there. You could ride it up to about that area at about 137. It's not a bad play if you use any kind of leverage, and really not even needed any leverage. Honestly, 5% move is pretty nice, right? And then that kind of protects you from any volatility that's coming out here soon. Or if you entered here, slide up your stop loss. Go ahead, lock in the profits. All right, lock those in, and then if it continues to move up and right, then you can move your stop loss up and right as with price action. So that's kind of how I would play it at this point. You know, if you did take that entry, obviously not financial advice, you do what you want. But that's kind of how I'm looking at it. You got to be kind of conservative right now until we kind of get some better news. As you come down to the oscillator, you know, in conjunction or in confluence with seeing this bounce here with this level of horizontal support, look at that. I mean, it's showing you had some bullish divergence as well as a trend reversal. So that all kind of lined up on the daily. Daily's pretty significant. So this was definitely a pretty decent entry for Solana. Again, I say top side in the near term here is about 144 where the point of control is. I would be definitely looking for some resistance there. You got the dynamic reactor just on top of it. The slower it takes for price action to get up here, you're going to see this dynamic reactor work its way down or at least level out in this area as well. So building confluence here for resistance. So keep your eye on that. I stand by 121 as well as 128. Honestly, I mean, you know, we haven't really had a close too far underneath of it. Really, I mean, if you lower that line a little bit to about 127, you say there's no close under that, right? So that could hold up. So you got a nice little range of support here, but then you have a lot of resistance here. So again, you're kind of in the middle of a range. So I pointed this out to you previously. You know, if you made that play, good on you. But you're in the middle of a range now. So if you're looking at it, this is where I would say you're just going to have to wait. Let the price come to you. All right. We already did that. We let the price come to us down at about 128. Got to play there. Now you got to let the price, you know, go one way or another before you make a play again. So depending on your conviction, depending on looking at the market, if the market is trending in a direction and you see price action for Solana push up, but you really think that the market's going to pull back, then you start maybe looking for a short opportunity right around the point of control, knowing that there's confluence with resistance. All right. So again, let the price action kind of come to you. Let that play out. And I would have a little bit more higher conviction if we got on top of this, right? Let's say we get on top of the point of control, on top of the dynamic reactor, you know, then you start looking for that OC retest. You know, we love that here on the Piper Academy. But then you want to see the continuation of the RSI going up and right. So could be an opportunity if we break that. You know, near term, I'm not really looking for that. I would just let the price action come to you, and then we kind of figure out where we're going to go once it gets up to this area right here at the point of control. Or if we come back down here and start retesting this area, you know, you don't want to keep retesting it too many times. I give you guys the analogy all the time. It looks like, you know, just chopping a tree. You chop that thing too many times, it's bound to fall. But what happens if we do fall through here, right? Well, you have this area at about 110 to kind of hang your hat on a little bit. You see the wick coming off of that, and it also aligns with the value area high. So not only do you have a wick showing you that there's buying pressure in that area, but you also have that aligning some confluence here with the value area high. You have another wick right here. Not so much in terms of resistance. It kind of broke through that. It didn't really, you know, get too hung up in that area. But I would look for that as an opportunity for a potential bounce or some kind of price action if price were to come down to that area. But right now, areas I'm looking at, top side 144, bottom side, you know, 128, 121 is probably the better play at this point since we've already kind of broken 128. But those are kind of the two main areas that I'll be looking for price action on Solana. Looking at the trend itself, though, like this actually looks better than Bitcoin. If you're looking at Bitcoin is trending down and right? So this goes all the way back to March, but this is staying in a range. This range is holding up like very, very well.
Yeah,
so
it is
you're not
for sure.
you know, you're seeing something different here on the charts for Solana, which indicates to me that it's actually a little bit stronger than Bitcoin, which is good news, right? So when I start talking about that, you're like, well, why does that matter? Well, it matters a lot because if Bitcoin makes its move up and right, let's say that it does find some support and it does make that move to the upside, you're going to see Solana probably move exponentially in comparison because it's just waiting, right? It's maintaining its area. So I would expect some pretty good movement for Solana if we get some bullish momentum from Bitcoin. So I would really keep an eye on Solana. I do like the way, you know, this looks in comparison. So definitely mark this one down. I'd flag Solana on your charts, honestly, just looking at this right now. So that's what I'm looking at. Pass it back to Piper.
Yeah, actually, we're at the bottom of the hour now. I will tell you, Caspa has
Holy
lost a
moly.
key area. Yeah.
No.
Yeah, yeah, it's lost a
No.
key area. We've lost the dynamic reactor and the quantum reactor on the daily, guys. I am actually looking, because we got that last rejection on the point of control, that it could be heading down to 13.5 cents. However, when we look at this on the weekly, just to get this into line for you guys, that is still going to be what we would call a higher low. So still looking bullish on the pattern here.
Where's Alex
But
go? We need him to sing for us.
I know, right? But yeah, that's what I'm seeing there on that, guys. We are going to be live. FDY and myself are going to be live looking at how can we trade this, because that is a fact of life in crypto or in anything, is that whether it goes up or down, if you are trading, there is money to be made. So we are going to be here this afternoon, FDY and I. That is going to be at 4 p.m. Eastern Standard Time. We're going to be going live for Trade Academy. And then right after that, for our members, our summa cum laude members, and our Blofin and our Chart Prime members in the Discord, if you guys are not a member, get down there, check all the links out below. We will be doing TA 101 and looking at some other trade setups in there right afterwards. So 2 hours of some short time frame trade setup, technical analysis going on today, starting at 4 p.m. Eastern Standard Time. Guys, we will catch you then. TradeFly, I appreciate you being on today, man.
Yeah, man, it's good being here. I was just looking at the cash chart. I was about to cry. No biggie.
Don't
worry
cry.
about me.
Don't cry.
Retro
Don't cry.
Retro Mike
You'll be
said
okay.
he's corrupted me. He definitely chirping in my ear a little bit, making me a little scared. But it is what it is. It's all good. I'm here in the chat. I'm alive. I'm drinking some coffee. It's good, man. It is all good. Things could be worse. Thank you guys for showing up today. We really, really appreciate it. I definitely love mixing it up with you guys. It is definitely something I look forward to. So I will be back tomorrow, and I will probably be in an airport, but we're gonna make this happen. So I'll find a lounge. I've done it before. You guys know I'm good for it. So I'll see you then. And then tonight, Crypto Nightcap, be there, 8:30 p.m. Eastern Standard Time. Doing that with my man FD White. It is going, dude. Super chats last night off the chain.
You get sloppy seconds with FD White. I get them first, and then you get them later tonight. So
yeah, but I'm his main piece, bro. You ain't nothing but a
side chick. I know.
Ain't nothing but a side chick.
I'm just a side chick. All right, man. Guys, don't forget to hit that like, subscribe. Guys, we appreciate you joining us here today on Piper Academy for the morning market report. Tune in this afternoon with FD White and I on Trade Academy, and then later this evening with the Crypto Nightcap with FD White and TradeFly. Guys, we will be back here tomorrow morning, right a little bit after Good Morning Crypto with Lunar Beaches and BC Port Corp. So they're going to be live first, then back here again for the morning market report. Friday closeout. We got unemployment data coming in tomorrow, guys, so you're not going to want to miss that. Until then, trade safe, and as always, protect your profits and use a stop loss.
I don't know what they keep telling me. I don't know what they keep telling me. Ain't no school like Piper Academy. Ain't no school like Piper Academy. We'll keep that front line covered, even when we're dead and gone. We'll find a way to keep going, cause we gon' keep on rolling up the wheels flow low. I know you hungry for knowledge, that's profit appetite. Classes in session, this for the Army Piper acolytes. Trade flag at the soul, train ready. What a line from OCI, from a Mexican spaghetti, yo. Crunch crypto with a deep dive to reject dime. And if you like the visual powered by Chart Prime, then you were part of that alumni, that's all spine. But if you have step, fall back to offline. We'll keep that front line covered, even when we're dead and gone. We'll find a way to keep going, cause we gon' keep on rolling up the wheels flow low. Sound off.
To get rhythm, the ZTS rhythm. Rip it, Alexandra.
Yeah, that's my alumni, you know what I mean.
That was awesome, dude!